How goes it all? Welcome back to Patterson All Properties. Hopefully you guys having a great and exceptional day. All right, let's get it in and hopefully don't commit too many sins. All right, so there's a multitude of real estate gurus laughing and at times making fun of a lot of people who are constantly posting on social media talking about they're consistently looking for the market real estate to basically crash. Looking for the crash here, they're looking for the crash there, they're looking for the crash everywhere. But in reality, that's not happening anytime soon. Regardless of what you think, any administration that's in office will do anything that they have to do to ensure that there's not a market crash on their watch, because the last time the president had a market crash on their watch, they definitely were never able to put their face with dignity on camera again when it came to politics on any aspect in any way. So just because the Fed, as of now in 2025, has finally made a Fed cut at a specific rate, doesn't mean that people are going to be able to buy homes at a much lower, or what we all like to call an affordable price. Because at the end of the day, family, we all have to be honest. Just because the interest rates may go down doesn't mean that most of the homes on the market are going to go drop in prices significantly enough to make a big difference in regards to if somebody can qualify for a home having a reasonable monthly payment. In today's real estate market, most single-family homes are priced at $500,000 across the entire United States of America, unless it's in a very small town or mid-sized city where the economy is basically collapsed, or it's a small town where there's basically nothing going on. For instance, I think it was Ocala, Florida, and whatnot. It's in the middle of Florida. It's in the middle of nowhere. It's not next to the ocean. It's not near any of the major cities. You can find a decent home for under $300,000 for $280,000, $270,000, but you have nothing around you, and really, how are you going to be able to sustain yourself unless you're rich, retired, or working remotely? So that's a great example right there. So according to the article that I read the other day, the Federal Reserve announced a 0.25% interest rate cut as of September 17th, 2025, lowering the federal funds rate at 4%, 4.25%. This is the Fed's first rate cut since December, and it comes at a critical moment for the United States economy. For real estate investors, property owners, and anyone facing new acquisitions, this decision could reshape cash flow valuations and market competition. One of the biggest reasons why there has been a lack of real estate investors in today's market in a lot of areas is because of the lack of cash flow deals. There are homes with lots upon lots of equity, but not a lot of cash flow deals. And for a lot of real estate investors, it's not the most feasible thing to do is to purchase a rental property right now, meaning that the homes are overpriced. Here are the reasons why the Fed made the rate cuts, beginning with cooling job growth. Hiring and payroll numbers have slowed in recent months. And once again, why would anybody want to buy an overpriced home if you don't have a job, or you're scared of losing your job? Easing inflation. Inflation is still above the Fed's 2% target, but has moderated enough to allow policy easing. But when it boils down to food, it's still overpriced regardless of the situation, regardless of what state you live in. I'd have been all over this country, from the Midwest, the West Coast to the East Coast to the Deep South in 2024 and 2025, and the price of food is up regardless of what state you're living in. Another thing, policy uncertainty. Government actions and global volatility created headwinds the Fed would no longer ignore. And this is very true. Because now you've had and this is not, I'm not getting political because I don't like politics whatsoever. I'm not for either side. But I will say that, with the tariffs that brought a lot of economic uncertainty, AI, a lot of jobs, just people being laid off. And then another thing is companies, a proposal for companies to have to pay a significant fee if they decide they want to bring in H-1B1 visa workers to their organization. And I could see the workaround for that just being that company would just open up that office in that person's country instead of bringing them over here and have them work for less and then go from there. But that's just my personal opinion. You never know. But anyways, remember, for any of this to happen or it takes place, it's going to take a lot of time to even see the difference in after the Fed rate cut. It's going to take, it's going to be going into the year 2026 with still a lot of high economic uncertainty. The article stated that these were the takeaways from investors with the rate cut Lower borrowing costs, mortgage rates, and commercial lending rates don't instantly match Fed decisions, but this move will gradually filter into cheaper financing for acquisitions, refinances, and construction loans. Cap rate compression, that's number 2. Cheaper debt attracts more buyers that can push up cap rates, lower and property values higher, especially in affordable secondary markets like Anderson, Kokomo, and Muncie, Indiana. Number 3, increased competition. Expect sideline buyers to jump back into the market. Investors waiting for rate relief may now compete aggressively for deals. Number 4, improved cash flow. With debt service costs, cash flow margins on leveraged rental properties could improve, making previously marginal deals more attractive. These are things that definitely one has to take into consideration, family. All right. So at the end of the day, last but definitely not least, now that the cuts have happened, here are some actionable steps for investors to consider taking in order to go through this current market stage, and just go from there. All right. Anyways, so number 1, rerun the numbers. Properties that didn't cash flow at 7% plus debt may now be penciled out. Number 2, move quickly. As financing improves, competition will rise, especially in the markets with strong rental demand. But this is the case for investors, but the investors have to, depending on the market, investors have to see, okay, you might be, I have an opportunity, this is a real hope, to buy more properties and whatnot, but the interest rates may be lower, but will the price lower? And that's the thing. So it's like, okay, you can still go from 200,000 to 400,000 and feel like you're not getting screwed over when it comes to the actual interest rates. However, if the seller is not willing to come down on the price, you're still paying the same price. You're just not paying a higher interest rate for the property. So you have to weigh your options out. Number 3, stay disciplined. Don't overpay. Stick to fundamentals like resident quality, location, and long-term stability. And because I can see people overpaying just because so many people are eager to buy more properties because it's been so long, and I know the feeling, since they've had the opportunity to get into the game, especially with the prices being so high, number 1. Then number 2, having to combat other corporations that have been soaking up a lot of the rental properties. All right, number 4, watch for more rate cuts. If the Fed continues, not likely, but we have been surprised before, valuations may rise further. Plan acquisitions accordingly. So with that being said, if more rate cuts take place and consumer spending grows and economic growth / confidence in the market, it will all be about where current and future investors want to purchase their next deals, and will there be given more incentives for investors as well. That is the thing at the end of the day. So we'll see what happens, act accordingly. Don't forget, Patterson Properties is wholesale real estate in the DMV area, Pennsylvania, specifically Harrisburg, Reading, Allentown, all that good stuff, Philadelphia. So check us out. If you're a stock market investor, crypto investor, individual retirement account investor, don't forget to check out Webull, Stash, AcornsCrypto.com, Coinbase, all these platforms. You'll be able to make some money moves. And hey, I'll get a bonus. You'll get some money. It's a beautiful thing. So, and I will do the great thievy things like share and subscribe. Have a great day. Make money moves so you can live, bro, like fools in Spanish. Bienvenido a la vida. Remember, can't get fired if you own the company. We're going into 2026. Time if you own something.